Hi everyone, we're Group 1 from Slot B, and today we're going to walk you through our case study on Init Limited.
Hi and a very good morning. My name is Putri Balkis and today I'll be talking about the analytical procedures at the planning stage of an external audit. It has both benefits and limitations. They help auditors understand their business by comparing current results with prior year budgets and industry data. This highlights the unusual trends or ratios such as changes in profit margins or receivable days, allowing auditors to focus on the higher risk areas and work more efficiently. However, there are some limitations. Planning stage conclusions rely on draft or higher level data, which may later change. Also, analytical procedures may not detect well hidden fraud or errors, as they only indicate possible issues and do not provide sufficient audit evidence on their own. Some of the methods that should be considered when using the work of Larissa Weems. The firm should consider Larissa Weems' objectivity as she was appointed by the finance director and assess whether she reported to the management or those charged with governance. Her competence should be evaluated by reviewing her qualifications, internal audit experience, and understanding the company's operations and control. The scope, timing, and quality of her work should be assessed, including the areas reviewed. The period covered by her resignation in August 2025 and the fact that her final report was incomplete. The firm should consider the relevance of her findings to key audit risk areas such as payables, inventory, and revenue. Finally, the level of reliance placed on her work should be limited in higher risk areas with more direct external audit testing performed.
For questions to be, I'll be explaining the key matters to consider whether to rely on the work of Den Haag LLP. So firstly is ethical and independence requirement must be considered. So it is important for group auditors to confirm that Den Haag LLP understand and complies with relevant ethical standards, particularly independence. So since Den Haag LLP is auditing Nevermore Limited, they must be independent from that entity to ensure that their audit work is objective and reliable. So if ethical requirements are not reliable, then the audit evidence obtained may not be appropriate for the group audit purpose. Next is the professional competence of Den Haag LLP should be assessed. This is because the group auditor needs to evaluate whether Den Haag LLP has sufficient technical expertise, qualifications, and industry knowledge to audit Nevermore Limited effectively. This includes considering their experience in auditing similar entities and their understanding of Nevermore Limited's business entity and industry. Also, educate competence ensure that sufficient and appropriate audit evidence can be obtained at the component level. The third consideration is communications, cooperations, and access to audit work. So Den Haag LLP must be willing to cooperate with the group auditor and follow the group audit instructions. This includes allowing the group auditor engagement team to be involved where necessary and providing access to relevant audit working papers. Also, access to working papers allows the group auditor to evaluate whether audit procedures performed are adequate and appropriate for the group audit purpose. Last but not least is the previous engagement experience and reputations should be considered. Why? If our firm has a positive previous dealing with Den Haag LLP, such as timely completions of work and high quality audit documentation, this increases the confidence in relying on their work. However, if past experience has been negative, the group auditor may need to increase involvement and supervision.
For question 3, we will discuss 4 internal control deficiencies identified at INIT, focusing on the possible consequences and recommendations. Firstly, supplier statements are not retained or reconciled with the payable ledger. This may cause INIT fail to record all supplier invoices, leading to unrecorded liability in the financial statement. Invoices may also be paid late or missed, resulting in penalties, loss of prompt payment discount, and damaged relationship with suppliers. Thus, supplier may place INIT account on hold, causing delay in supplies and disrupting production. There is also a higher risk of duplicate or incorrect payment, which could negatively affect cash flow and profitability. Finally, weak control increases the risk of fraud, such as fictitious or inflated supplier invoices being processed without detection. To address this issue, Supplier statement reconciliation should be performed regularly by staff independent of the purchase ledger, and any discrepancy should be investigated promptly. The second deficiency is that init does not update antivirus software regularly. Outdated antivirus software increases the risk of viruses and hacking, which could damage init critical design data. Loss of design data may cause production delays and fail to meet customer requirements. Cyber incident could also disrupt business operation, leading to loss of revenue, increased costs, and reduced customer confidence. In addition, sensitive customer and commercial data may be compromised, resulting in reputational damage, possible legal claims, or breach of data protection regulations. To reduce this risk, Init should ensure antivirus software is updated regularly and data backups are stored offsite.
For question 3C, init orders metals and starts production before getting written approval of the design and price. In this case, the metals ordered may not match the requirement if design changes. So the unusable metals may reduce inventory turnover and increase storage costs. Second, cash is tied up in inventory, leading to cash flow pressures. And if metals are stored for a long time, there could be higher inventory impairment losses. Third, work may be done to the wrong design and wasted, and rework increases actual production costs. Next, init may not recover incurred costs if customer cancels order. Moreover, costs are incurred before the selling price is confirmed. If the final selling price is lower than expected, the job may have a low margin or even loss. Finally, capacity is diverted to unapproved jobs, delaying other confirmed orders. To control this, init should not order metals or start production until the customer signs written approval. This should be a formal policy, and staff should be trained on it. The system should also block purchase orders and production orders without approval documents. For question 3D, employees handle metalworks without protective clothing, so the risk of injuries increases. If staff are injured, they may need sick leave, so productivity will drop and orders may be delayed. Second, init may need to pay compensation and face lawsuits. This increases its financial and legal pressures. Besides, not providing protective clothing is a breach of health and safety regulations and may lead to fines or even a shutdown order. Also, if incidents happen, insurance premiums may increase, and the company's reputation may be damaged and customer may be lost. Last, employees may feel unsafe and complain, so turnover may increase and productivity may reduce. To control this, init should provide proper protective clothing to employees, and wearing these clothes should be mandatory with supervisor monitoring. Besides, safety instructions should be displayed clearly at workspace, and init should also provide regular safety training for all the staff.
Moving on to question number 4, justify why items listed by the engagement partner have been identified as key areas of audit risk, and for each item, describe the procedures that should be included in the audit plan in order to address those risks. Firstly, in terms of trade receivables, it increased significantly from £451,000 in 2024 to £980,000 in 2025. This increase is disproportionate to revenue growth and may indicate that the trade receivables are overstated. Auditors should perform direct confirmation of trade receivable balances with a sample of customers. Metals were ordered and work started on some commissions before written approval from customers. This raises risk that a company may have invoiced amounts without a valid contractual agreement, meaning trade receivables may be overstated and not legally recoverable. Customer contracts and written approval should be reviewed to confirm that receivables recorded are with approved commissions and valid contractual terms. Next, quality issues from new suppliers have resulted in customer complaints. Customer may delay or withhold payment, leading to increased risk that provision for doubtful debts is understated. Auditors should inspect post-year-end cash receipts to assess the recoverability of trade receivable balances at year-end. They should also evaluate the adequacy of provision for doubtful debts, especially for customers that had quality complaints, by reviewing subsequent credit notes and management's impairment assumptions. Lastly, since revenue is recognized when goods are dispatched, it may be many months after commission. This will increase risk of incorrect cutoff, where receivables and revenue are recognized in the wrong period. So auditors should test cutoff at year end by examining dispatch notes and sales invoices immediately before and after 31st December 2025.
For trade payables, several key audit risks were identified for any limited. First, supplier statements are not retained or reconciled with the payables ledger. This is a significant internal control weakness and increases the risk that trade payables are understated, particularly at the year end, which affects the completeness assertion. The auditor should perform a search for unrecorded liabilities by reviewing the invoices received and payment made after year end that relate to the purchases made before year end. Second, India has experienced rapid growth and now uses several new suppliers due to the increased demand for its products. This increases the risk of errors or invalid suppliers, meaning that trade payables may not represent genuine obligations. So, the audit procedures include vouching trade payables balances to supplier invoices, purchase orders, and goods received notes, as well as reviewing the supplier master file for unusual or one-off suppliers. Third, metals are purchased from overseas suppliers and invoiced in foreign currencies. This creates a valuation risk as trade payables may be incorrectly translated at the reporting date. So the auditor should recalculate foreign currency payables using the appropriate closing exchange rates and compare them with the recorded balances. Finally, metals were ordered and production started before written customer approval was obtained. If the commissions are later cancelled, any may still be liable to the suppliers, increasing the risk of unrecorded trade payables. Therefore, the auditor should review cancelled or dispute commissions and ensure that any related supplier liabilities have been fully recognized.
For question number 5, I'll be explaining key matters to be discussed with audit junior team members. So firstly is understanding client business is crucial. Why I say this? Because auditors cannot effectively identify risks without understanding how the business operates. The audit team should be briefed on the any limited operations, industries, and regulatory environment. Also, particular attention should be given to judgmental areas such as revenue recognitions, long production cycles, and reliance on overseas suppliers. In addition, significant changes during the year, such as rapid growth and the acquisitions of Nevermore Limited, should be highly highlighted because this increase audit complexity and introduce group audit considerations. Next is areas of key audit risk. This is important because it helps the audit team focus on areas where material misstatements are most likely to occur. The statement should be made aware of significant audit risks, including areas susceptible to fraud. For example, premature revenue recognitions or understatement of liabilities may occur. Also, team members should be encouraged to remain alert to fraud indicators such as unusual transactions, management of rights of control, or contradictory audit evidence. Next, audit work should be clearly discussed. This is important because clarity in audit planning helps ensure consistency and audit quality. In line with ISA 300, the overall audit strategy and objective of planned procedures should be explained, including how they address identified risks. Also, materiality and performance materiality threshold should also be communicated to guide the audit testing. In addition, the allocations of audit work, documentation requirements, and review processes should be discussed. In accordance with ISA 220, expectations regarding supervisions and quality management should be clearly communicated. Last but not least is ethical requirements, independence, and professional skepticism must be reinforced. This is important because ethical behavior underpins the credibility of the audit. In line with ISA 200 and IUSBA Code of Ethics, audit team members should be reminded of their responsibility regarding independence, objectivity, confidentiality, and integrity. Also, professional skepticism should be applied throughout the audit, especially when assessing management representations or judgmental areas.
That's all from Group 1. Thank you for listening.